Hi friends, welcome to the 11th class accounting class. Today we are going to discuss about the subsidiary book. The last class we had discussed about the purchase book and sales book. Today we'll discuss about the purchase return book and sales return book. How to prepare, and at the last we will see that posting to the ledger accounts. So hope you will enjoy the class. Don't try to forget to subscribe my channel, YouTube channel. Please subscribe, give your comment, suggestions if any. So hope you will enjoy it. Let's come to the discuss about the class. That is a purchase return book. As we had recorded earlier, the purchase of goods on credit only. Purchase of goods on credit only recorded in the purchase book or the purchase day book. So likewise, the purchase of goods on credit returned to the suppliers will be recorded in the purchase return book or the return outward book. That is return outward book, because purchase of goods by the business from the supplier on credit will be returned to the supplier due to some defective or damage or some other reasons not up to the quality or the conditions. Then the goods will be returned to the supplier. So that is to be recorded in a separate book, that is separate subsidiary book, that is called purchase returns book or the return outward book. Remember one thing, only the goods which are purchased on credit but returned due to defective, that is recorded in this book. No other transaction, purchase of goods on cash but returned, or the purchase of assets on cash return, or the purchase of assets on credit return will not be recorded in this book. Purchase of goods in cash return, that is cash book, it will be recorded, already I told you. And purchase of assets by cash, that is in purchase book. Purchase of assets on credit will be recorded in the journal proper or the general journal. Okay. So only the goods which are purchased on credit but returned due to defective or damage or due not up to the satisfactory conditions of the quality marks or any other reasons, but returned to the supplier is recorded in this book. So let's see that while we are purchased the goods on credit but return, then we have to make a note. That is the debit note is to be prepared. You can see this debit note, that is the format of the debit note we had prepared. So this debit note is to be prepared by the purchaser or the buyer or the business who purchased the goods on credit and sent to the supplier, intimating that your account has been debited due to the return of the particular goods of this particular price. So that is to be a debit note is to be prepared. So debit note is a note which is prepared by the purchaser of the goods when the goods are returned by the purchaser or the buyer to the supplier due to defective, intimating that the supplier's account is debited in the books. So that debit note, this debit note has to be prepared. So let's see, that is the format of the purchase return book or the return outward book, so or the purchase return day book. So as the goods have to be returned every day on basis, that is recorded in this book. So this is the format. First date column, then the particulars, that is the particulars means name of the suppliers whose account is to be debited, then debit note number. This debit note which is to be prepared, you have to indicate the debit note number. Then the ledger folio, that is the reference page of book of the ledger in which it is to be posted. Then the details, then the amount, net amount. Let's see these examples. Books of Ramesh brothers. So that is the purchase return book of Ramesh and brothers, Mumbai. So that is the to be purchase return book. So that is the date is given, that is the April 2020, April 1st. That return to Videocon International India Limited, Kolkata. So that is Videocon International India Limited, Kolkata. This is the name of the supplier to whom goods is returned. Why it is returned? Because due to defective. So 3 color televisions at the rate 15,000 each. This is 45,000. Okay. So that is the price. Then less trade discount. As the goods is purchased by trade discount, it is also returned at the by subtracting the same trade discount. So less trade discount 10%. So that is 4,500. So remaining price 40,500. This is the amount column that is to be shown. Then second 20, April 20. So this is April 20. Return to Music India Limited, New Delhi. This is Music India Limited, New Delhi. That is the name of the supplier. Then 2 music system at the rate 10,000 each. That is 2 music system at the rate 10,000 each. So total amount is 20,000. Okay. So then less 15% discount, less 15% trade discount. That is 3,000, net amount 17,000. So total amount, now you make the total of this amount column. This is the total of this amount column. So total is 57,500. Okay, this is the total 57,500. So this is the name of the supplier to whom goods is returned. You have to put the debit number note 1. Suppose this is 2 debit note number. Accordingly, you have to prepare the debit note. So here I had shown you that is the Ramesh Brothers Mumbai. That is the businessmen who purchased the goods from those. Then debit note number. So that is the Music System India Limited. This is the Music System India Limited. So that is the debit note number 2. So this is on April 30. So that is April 20 purchased. So this debit note is prepared on April 30. So that is the April 30 is there. Sorry, that is April 20. So on 20 it is has been purchased. So that is the Music System India Limited, New Delhi. Return of 2 music system being received in damage at the rate 10,000 each. So total is 20,000. Less 15% discount 3,000. 17,000. Net invoice rupees 17,000 only. So signature of the manager purchase. Then error and omission erected. So this is the words debit note he had prepared, indicating his accounts is to be debited. Then less 15% discount. So total amount is purchase returns account that is credited, that is 57,500. So this is what purchase returns book or the return outward book is to be prepared. So this is the way how you will prepare it and practice it. As you practice, you will get the knowledge. So now comes to the posting, from purchase return book to the ledger posting. How you will post into the ledger. So this is purchase returns account. So this is the purchase returns account. This is the ledger account. Now we have posted to the ledger account. This is ledger journal folio. This is the date. This is amount, journal folio. Next, this is debit. This is credit. Okay, this is the debit and this is the credit. This is your date, particulars. That is journal folio. Then amount. Likewise, date, particulars, journal folio, then amount is written. So this is the format. So this is purchase return book. This is the purchase return account, ledger account. How we post it? As I had already told you in the previous class, from purchase book to the ledger posting and sales book to the ledger posting, the same process you will post it here. Very easy process. Total purchase return account credited 57,500. So 57,500 credited means there is 2020 April 30. That is the last date closed. The books is closed on last day of the April 30. So that is by sundries as for purchase returns book. Sorry. So 57,500 total. So this is 57,500. There is 2020 April 30 to balance return 57,500. So this is what will be posted. So from purchase return account, total is credited. That is, you have to write here by sundries, credit side. That is purchase return account credited is written. So you have to write in the credit side. That is by sundries as per the purchase return book. That is 57 total amount 57,500. So to balance carried down 57,500. Then May 1st by balance brought down 57,500. So by this is the way by which you will post it to the ledger account. So likewise, you can post to the individual suppliers account. That is the Videocon International India Limited Kolkata or Music India Limited in New Delhi. So in Music India Limited in New Delhi, this is to be debited because it is a debit notice prepared. So this is debited means in the debit side of the Music India Limited, you will write to purchase returns account. So that is 17,000. So let's see that how it will be prepared. Okay. So we can prepare the other ledger account, that is the Music India Limited, how it is to be posted in the ledger account. So in Music India Limited, that is the supplier to whom goods we have returned. So we have to prepare here Music India Limited, that is New Delhi. So there is the New Delhi account. Okay. So in this account, you have to prepare that goes to the ledger account. So this account is to be debited. Okay. So that is April 20. So that is April 20. You have to write here in the debit side. That is to purchase returns account, that is 17,000. So this is 17,000 is there. So this is 17,000 posted. Then total 17,000 there. So that is April 30 by balance carried on 17,000. So total is 17,000. So again May 1st, this will be first to balance breakdown 17,000. So this is the way how you will push it to the ledger account, from purchase return books to the ledger account of the supplier, from purchase return book to the purchase returns account of the ledger account. Already I had shown you. So this is how you will prepare it. So now let's comes to the sales return book. How will you prepare the sales return book? So this is sales return book. So purchase return book you had understood. Now comes to the sales return book. Sales return book is the book which is to be prepared by the business when the goods sold on credit to the debtors or the customers, but customer returned it due to defective or damage or some other conditions. Okay. So this goods which is to be returned by the customers or the debtors to the business is recorded in the separate book, that is called sales return book or the return inward book. So this is sales return book or return inward book. Sales return book or the sales return day book or the return inward book, you have to record it. Okay, this is the separate book is to be maintained for the goods sold on credit but returned by the customers. Only the goods sold on credit returned by the customers, but the goods sold on cash returned, that is recorded in the cash book. Purchase of assets either by cash or on credit returned by the customer, that is recorded in the journal proper or the general journal and the cash book, not in the return inward book or the sales return book. It records only the goods which are returned on, sold on credit, returned by the customer. So for this you have to prepare a note, that is called credit note. Okay. So this is credit note you have to prepare. So credit note prepared by the business and send it to the customer, stating that your account has been credited by this amount which you had returned the goods. So this is credit note. Credit note is prepared by the debit note is prepared by the purchaser, that is business have to prepare and send it to the supplier. The same case is when the goods is returned by the customer to the debtor, customer to the business. That means business sold the goods on credit. Business is the seller, purchaser here is the debtors. So purchaser returns, the seller has to prepare a credit note and send it to the customer or the debtors, stating that your account has been credited by this amount due to the defective of the goods which you had returned. So this is the credit note you have to prepare and you have to enter here the credit note number. This is the format, date, particulars, credit note number, then date details, then this is the amount. Okay, let's take these examples, the previous examples. That return, that is returned by, this is returned by Reduction International India Limited, 3 color television 15,000 each less 10% trade discount. Then 20 April 20, that is returned by Music System India Limited, that is 2 music system at the rate 10,000 each, less 15% trade discount. Okay, so you have to prepare the return inward book. So for that, before preparing the return inward book, you have to prepare the credit note. You have taken the examples of the credit note of the April 20, which is returned by the Music India Limited. That is the Ramesh and Brothers Mumbai, to whom it is to be returned. It is returned by Music System India Limited. So literally return to music systems being received at the damage at the rate this 10,000 less 15% discount 3,000, then net invoice 17,000. So rupees 70,000 only manager purchase to put the signature and send it to the debtors for the customers. So this is the transaction. Let's see how transaction is to be recorded. So this is the Videocon International India Limited first, who returned 3 color televisions 15,000 each. So total 45,000. So 3 in multiplied 15,000, that is 45,000. Less trade discount 10%, 4,500. Net amount 40,500. Then on April 20, that is music systems. That is music systems India Limited, New Delhi. That is 2 music system at the rate 10,000 each. So less 15% discount, that is 3,000. So that is the total amount is 17,000. So total amount 57,500. So that is the sales return account debit. So total amount sales return account debit 57,500. So this is how you will prepare the purchase book. So very simple. Who returned the goods, his name is to be written. Then the description of the goods, trade discount will be subtracted, net amount will be shown in the amount column after showing the details in the detail column. So that is the date wise, it is chronological basis, it is to be recorded. Then total amount which is to be found at the last will be, that is the sales returns account debit. That is the sales return account or return inward account will be debited. Return outward account credited, say purchase return account credited, whereas sales return account debited or return inward account debited. So this is the return inward account debited. Now you see, that is how you push it to the ledger account. If you push it to the ledger account, then it is to be pushed like this. So there is the customers account. I have taken this Music System India Limited Mumbai. So that is the New Delhi. Sorry, it is taken New Delhi. So Music India Limited, you have to push it. That is the debtors is to be credited. So this is April 20. That is by return inward account 17,000. So that is April 30. To balance carried on. So there is April 17,000. So then May 1st by balance brought down 17,000. So sales return account debited to Music India Limited. Music India Limited credited by sales return account. So likewise, if you push it in to the sales return account, we can prepare this in. If it is sales return account, see how this is to be appear. You can prepare it easily. Okay, so let's see. This is how it is to be prepared. That is sales return account. So that is sales return account. Total is coming 57,500. So sales return account debited. So April 30 at the last date you have to show here. To sundries. Sundries means total. To total. As for sales return book. So total is 57,500. So total 57,500. So April 30 by balance return. So 57,500. So there is the. So this is how it is to be posted, and in May 1st to balance brought down 57,500. So sales return account is debited here written. So debit side you will write to sundries as per for return inward book or sales return book. So this is the ledger posting. So today you have understood that purchase book, return book, and its posting to the ledger account, sales return book and posted to the ledger account. Two other things you had know, that one is your debit note prepared at the time of purchase return goods and return inward book, and credit note at the time of sales return of goods on credit. So that is the two note you have to prepare. Understood? This is how it will be prepared, because this is necessary, and this is how you will practice it the problem. Oh, you will practice more and more problem, and more you will gain the knowledge. Thank you.